One of Wall Street's most legendary traders just made a move that contradicts everything he's been doing for the past year. By the end of this video, you'll know exactly why Tudor Jones is betting big on Bitcoin again, and what 3 specific signals tell us institutional money is about to flood back in. Tudor Jones investment firm just filed paperwork showing they increased their position in BlackRock's Bitcoin ETF. Here's why that's massive. For the entire past year, Jones has been selling, trimming his Bitcoin exposure, moving to the sidelines. Now he's reversed course completely. This is the same guy who called the 1987 crash, who made hundreds of millions shorting the dot-com bubble. When Tudor Jones changes direction this dramatically, you pay attention. Oh, what changed? 3 things happened in the last 60 days that almost nobody connected together. First, the Bitcoin ETFs hit a technical bottom. Money stopped flowing out. Second, regulatory clarity started emerging faster than expected. Indeed, third, and this is the detail, everyone missed institutional custody infrastructure just got approved for something they've been waiting 2 years for. Let me break down what's actually happening behind the scenes. When BlackRock launched their Bitcoin ETF in January, it became the fastest growing ETF in history. Billions poured in during the first quarter. Then something shifted. The regulatory environment got murky. Europe started threatening Tether. The SEC kept delaying decisions. Smart money like Tudor Jones started trimming positions. That selling wasn't panic. It was strategic. These guys were waiting for clearer rules of the game. Fast forward to now. The Stablecoin and Digital Asset Protection (CT) just passed committee. That's the bill that creates actual regulatory frameworks instead of enforcement by lawsuit. Suddenly, institutions know what compliance looks like. They know how to hold Bitcoin legally. They know how to report it to their investors. Here's where it connects to the bigger picture. Bitcoin isn't just another investment anymore. It's becoming part of the IO 2002 compliant financial system. That's the global banking messaging standard that's replacing WIFT, the same standard that tokens like XR and XLM are built around. What does that mean in plain English? It means Bitcoin is transitioning from speculative asset to actual financial infrastructure. The same infrastructure that moves trillions of dollars between banks every single day. Tudor Jones sees this. What does BlackRock? Who do the pension funds and endowments? They're quietly filing their own TF positions right now. Look at the timing. Jones increases his stake right as Bitcoin tests critical support levels, right as institutional custody gets clearer, right as the IO 2002 transition enters its final phase in 2025. That's not coincidence. That's positioning before the crowd figures it out. Now here's what makes this different from 2021. Back then, institutions bought the top. They chased momentum. This time, they're buying the fear. They're accumulating while retail is still nervous. That's how generational wealth gets built. If you're looking to start trading Bitcoin or any of the tokens we discuss, you can use BitUnix with the link in the description to get started. What should you actually watch next? 3 specific things. First, watch for more hedge fund filings in the next 2 weeks. The deadline for quarterly reports is coming up, and we'll see who else followed Jones into Bitcoin ETFs. Can watch Bitcoin's behavior at 42,000. If it holds above that level with increasing institutional volume, that confirms the bottom. Third, watch for any announcements from major banks about IO 2002 integration timelines. That's the catalyst that brings everything together. The pattern is clear. Legendary investors don't reverse course unless something fundamental changed. Tudor Jones spent a year selling. Now he's buying. The regulatory fog is lifting. The infrastructure is being built. The institutions are positioning before the next wave hits. This is educational content, only not financial advice. Ways to your own research before investing. These are volatile markets, and past performance doesn't guarantee future results. But the smart money is making its move right now. The question is whether you'll recognize the pattern before it's obvious to everyone else. Follow Stack Daily 60 for daily crypto and money tips.